All right, today we are diving deep into a microscopic battleground that has huge implications for all of us, the world of LED chips. We're going to deconstruct the 2025 market by looking at three absolute titans, HCS, SVC, and FLT, to figure out whose grand strategy really paid off when the dust settled.
I want you to think about that for a second. The nervous system of every screen you own. Every single pixel on your phone, your TV, your car's dashboard, it's all brought to life by these tiny, brilliant little components. They are, quite literally, the invisible, light-emitting nervous system for our entire digital world.
And believe me, they are absolutely everywhere. We're talking about the stunning displays in our living rooms, the smart headlights on our cars, the immersive worlds inside our AR and VR headsets. They're even in super advanced medical devices that use UV light to sterilize equipment. So yeah, understanding this market is really about understanding a core piece of all modern tech. So in this incredibly competitive space, three companies really stood out in 2025. And what's fascinating is that they each had a totally different playbook for how to win. You've got the integrated empire, the patent titan, and the efficient independent. Let's break down who's who.
First up, we have HCS, also known as BOE HC SemiTek. We're calling them the integrated empire, and for good reason. See, they're not just another chip maker. They're basically the dedicated engine for their massive parent company, BOE, which is a global giant in display manufacturing. Their whole game plan is built around this idea of screen-chip linkage, which just means they have a guaranteed customer for pretty much everything they make.
Next up is SVC, or Seoul Viosys, who we've dubbed the patent titan. Now, this company's strategy is completely different. It's not about cozy internal supply chains. It's all about pure technological domination. They've essentially built an impenetrable fortress of patents that lets them control the most valuable high-tech parts of the market, like advanced automotive lighting and UV LEDs. And rounding out our trio is FLT, or Focus Lighting's the efficient independent. As a standalone player, they don't have a giant parent company feeding them orders, and they don't have a massive patent moat. So, what do? They have to be faster, leaner, and more agile than everybody else. Their whole game is about operational excellence and being able to pivot on a dime. Okay, so we've got three very different strategies on the board. Now let's get to the good part and see how these philosophies actually held up on the manufacturing battleground. This is where the numbers start to tell the real story, the one about patents, processes, and, of course, profitability. Let's kick things off with the patent titan, SVC. The number you're looking at right here, 7,000 plus. That isn't just a number, it is the entire foundation of their business. We're talking about over 7,000 patents. This isn't just a portfolio, it's a fortress of intellectual property that covers the whole spectrum of light, from what we can see to UV.
And this chart just makes it crystal clear. I mean, look at that gap. While HCS has a respectable portfolio of its own, and FLT has a few key patents, neither of them even comes close to SVC's IP fortress. This is a massive wall for anyone who wants to compete on the global stage, especially in those premium markets.
Now, before we talk about who's most efficient, we've got to quickly touch on one key technical term, epitaxial growth. It sounds super complex, I know, but it's really the fundamental step where the magic happens, where the light-emitting part of the chip is actually born.
Probably the best way to think about it is like you're baking a perfect, incredibly complex, multi-layered crystal cake. You start with a flawless base, which is a sapphire wafer. Then, inside this special oven called an MOCVD, you add one molecular layer at a time. Each layer is baked to absolute perfection to build up the chip's structure. The quality of this bake literally determines everything about the chip's performance.
Okay, so this slide shows us two very different roads to efficiency. Look at FLT, the efficient independent. They are running their factories at an unbelievable 97.9% capacity. I mean, they are squeezing every last drop of performance out of their assets. HCS, the integrated empire, is a little lower, but that's because they're focused on a different kind of advantage. They're upgrading to bigger 6-inch wafers, a move that slashed their unit costs by over 15%. But, and this is a big but, these strategies come with some hidden dangers. For HCS, almost half their sales go to their parent, BOE. That's great for guaranteed business, but it also means their parent can squeeze their profit margins. The real shocker here, though, is FLT. A massive 74% of their supplies come from a single source, and it's a precious metal recycler. That is an incredibly risky level of dependency.
So let's zoom out a little bit. These internal strategies weren't happening in some kind of bubble.
In 2025, all three of these titans had to navigate a total minefield of geopolitical tension and massive supply chain disruptions.
And everyone was facing the same storm. We're talking rising tariffs, new restrictions on critical equipment, like those MOCVD baking ovens we mentioned, the constant threat of supply chains just decoupling, and sharp spikes in the cost of raw materials like gold, which is a crucial component.
So how did they respond? Well, they made two very different bets. SVC, the patent titan, decided to hedge its risk by spreading its production all over the globe, with major hubs in places like Taiwan, province of China, and Vietnam. But HCS and FLT, they did the opposite. They doubled down on a domestic strategy, pushing hard to use homegrown equipment to make themselves more self-reliant. So all of that sets the stage for the final test of resilience. We've seen the strategies, we've looked at the data, we've felt the external pressures. Now, let's check out the 2025 scorecards and see who actually weathered the storm.
And the results are just fascinatingly mixed. The patent titan, SVC, they held on to their premium market position, but the insane R&D costs needed to stay on top, plus those global headwinds, meant they actually faced operating losses. The integrated empire, HCS, had its stable pipeline of orders from its parent, but that wasn't enough to stop them from taking a major net loss. And then there's the efficient independent, FLT. They were the most profitable, but that profit came with a giant, flashing asterisk.
This quote from the HDIN Research analysis really nails the key takeaway. In 2025, just being big wasn't enough anymore. You couldn't just scale your way to success, you needed a defensible niche, something special, whether that was world-class tech, a closed ecosystem, or just being the most ruthlessly efficient operator out there.
And now, let's talk about that big asterisk next to FLT's name. This chart is the big reveal. You'd think a chip company makes its money selling, well, chips. But look at this. A shocking 55%, over half, of their total revenue in 2025 didn't come from LED chips. It came from recycling precious metals. That business was booming because of those high material costs we mentioned. So while it inflated their revenue, it also confirms their biggest supplier is also their biggest side hustle. That is a massive concentration of risk.
Which leaves us with the million-dollar question for the future. As the whole industry starts to shift toward the next big thing, micro-LED, which of these three strategies is actually built to last? Is it the guaranteed demand of the empire, the technological moat of the titan, or is it the pure speed and agility of the independent? Honestly, the answer is far from certain.
And just a final but very important note. This analysis is for informational purposes only, based on research from HDN, and it absolutely does not constitute any form of financial or stock trading advice. Thanks for watching.